Hi everyone, this is a technical analysis on gold. Let's start with a fundamental overview first. Gold ended the last week negatively as first the positive expectation for the US UK trade deal and then for the US China talks over the weekend weighed on the precious metal. In the bigger picture, gold remains in an uptrend as real yields will likely continue to fall amid Fed easing, but in the short term, positive news on the trade front or a hawkish Fed could trigger more downside for gold as the market prices out stagflationary fears. Now, the daily chart, we can see that gold continues to pull back amid the positive news on the trade front. From a risk management perspective, the buyers will have a better risk reward setup around this major trend line, while the sellers will look for a break lower to increase the bearish bets into the 2,957 level next. On the 4-hour chart, we can see that the price fell all the way back to the key support around the 3,258 level. This is where we can expect the buyers to step in with a defined risk below the level to position for a rally back into the 3,367 resistance. The sellers, on the other hand, will look for a break lower to increase the bearish bets into the major trend line next. On the 1-hour chart, we can see that we have a minor downward trend line now defining the current pullback. If the price gets there, we can expect the sellers to lean on the trend line with a defined risk above it to position for further downside. The buyers, on the other hand, will look for a break higher to increase the bullish bets into new highs. These red lines define the average daily range for today. For the upcoming catalysts, today we get the US China trade talks briefing, tomorrow we have the US CPI report, on Thursday we get the latest US jobless claims figures, the US PPI, and the US retail sales data, and on Friday we conclude the week with the University of Michigan Consumer Sentiment Survey.